we're going to get started. I know we have a few more people coming in, but we'll get started and just have them join us as they get in. So good afternoon and happy Earth Day. Really glad to see you all here today. My name is Thelma Ekocha, and I am the Director of Operations and Communications at Graft Africa. So on behalf of our entire team, I want to say a huge thank you for being here today. You could have chosen to be anywhere else this afternoon, but you chose to spend this afternoon with us. So really glad you're here, and we hope this will be an insightful conversation and networking for everyone involved. So again, really glad you're here, and thank you. Now, before we get right into afternoon today, I want to take a few minutes to tell you a little bit about Graft Africa and the Common Ground series and why we've chosen to bring this conversation to DC Climate Week. And before we get into the conversation, I will also take a few moments to thank our partners who helped us make today possible. So, Graft Africa, a little bit about us. We are an impact-first organization. We are working to transform West Africa's agri-food systems so that they work better for the people who depend on them the most. We work across 4 domains of change. First, we work with farmers and food producers towards increasing what's produced, reducing what gets lost after harvest, processing raw harvests into higher value products, and making sure that a greater share of that value stays in the hands of the people who helped grow them or produce them. Second, we bring a structured support to young people, building the next generation of agri-food solutions in the region. We connect them with capital, with markets, with mentors, and with each other across the West African region and along the West Africa, North America corridor. And our third domain of change is on knowledge aggregation and dissemination. We are building an agri-data exchange, value chain mapping capabilities, and networks that connect actors across the system, so that the insights and relationships needed to address the information asymmetries and enable evidence-based decision making that actually reach the farmers, the investors, the policymakers, and the innovators working in a currently fragmented and under-optimized system. Our fourth domain of change is leveraging convenience such as this, as well as our communities of knowledge and practice. We also engage in matchmaking interventions and advisory services to accelerate critical partnerships within this system. And we also facilitate collective inquiry into specific questions that matter within this agri-food related domains. And we also work at the intersection of energy and health and infrastructure and sustainability. So through convenings such as this, the Common Ground series, our goal is to hold everyone in this room, including ourselves, accountable for moving these conversations into action. So this is what we have built Common Grounds around. It is what we see as our practitioner-led conversation series. This is a space where people who hold the capital, people who possess the knowledge, the people deploying solutions on the grounds, like the farmers themselves, can come together, like find each other and interrogate different issues within this space honestly, and also come together to co-create solutions that then lead to system-wide change. So we're really we're very thoughtful about what we're doing to make sure we are involving all the actors in this field and thinking critically and honestly about the solutions that we're trying to bring within this space. So today is our first Common Grounds in-person event. So thank you for being, our first in-person guest. And we see this forum as a way to bring the African diaspora and Africa's partners to DC Climate Week. This is a time where we get to engage with members of the African diaspora and Africa's partners in the DMV area. So today we want to critically explore what happens when the diaspora networks, expertise, investment are brought deliberately to bear on the farmers and the food system actors who are creating value for the continent's agricultural and food systems. Now, before we dive into the conversations, I do want to take a few moments to acknowledge the partners who made today possible. It's definitely a community effort, and in particular, the International Development Studies program here at the Elliott School is one of our key partners for today's event. We have the Global Food Institute here at GW and the Institute of African Studies. And we also have our friends at 12ness who helped with the creative production for today. We are truly grateful for your support. And we have in the room Dr. Christina Fink here, who is the director of the International Developments Program here at the Elliott School. We're truly grateful for your support and all you've done to help make today possible. So we will get a chance to mingle at the end of the conversation. But for now, I want to invite Magada, who is the founder of Graft Africa, to set the scene for us as we get started with the first part of the afternoon, which is going to be a fireside chat. And the floor is yours.
Hello, everyone. Good afternoon, good evening. Happy Earth Day. Thank you all so much for making the time to be here. Before I get into some of the fun stuff I have to say, I want to shout out Jennifer Cook, who is the director of the Institute for African Studies here. I believe she's in the room right over there. We're expecting our friends from GFI as well. I don't know that I've spotted them, but that's Laura. So like, hi, Laura. Okay. Welcome to the second edition of Graft Africa's Common Grounds. We've previously done this virtually, but this is our first convening in person, like Thelma said, and we're super excited to be doing this with you. I want to start with a number that most of us know, and hopefully light a fire from there. Africa received 95 billion in diaspora remittances last year. That's more than official development assistance, rivaling FDI, arguably. That's an extraordinary expression of commitment. That's millions of individual decisions made every month to send something back. 75% of that goes to household consumption, meeting the real needs of households in the region. And this accounts, a region that accounts for the world's fastest population growth rate. That said, stopping at that number and asking how we redirect even a fraction of those flows into agriculture is only part of the conversation. The more demanding question, I think, is what it would take to mobilize the full range of diaspora contributions and what that could mean. So, from patient and catalytic capital to angel and syndicate participation, market facing investments in infrastructure and value chains, etc. And alongside all of that, the assets that cannot be wired, knowledge, technical expertise, market access, certification pathways, trusted relationships that take years to build and cannot be captured by some of the metrics that we always talk about. It's that fuller picture that I hope that this conversation we're having tonight explores as best as possible. And here is why this matters. According to ISF advisors, there are approximately 130,000 agricultural SMEs across sub-Saharan Africa. This ranges from the processors to the aggregators, the cold chain operators, distributors that handle roughly 65% of the food that is produced on the continent. The annual financing need is estimated at $90 billion, and formal channels currently provide about 15.5 billion of that. There are other estimates. I think the African Development Bank reaches 180 billion rather, when you account for cooperatives and additional actors. So while the exact number is contested, what is not contested is the order of the magnitude of the shortfall. Agriculture receives less than 5% of commercial lending across the continent, and that's far below its contributions to our GDP and livelihoods. That's not because the sector lacks potential, as people in this room already, probably know. It's in part because the instruments available are not often designed for its realities. Let me give an instance. So a farm that's transitioning to regenerative practices faces a 1 to 3 season yield dip as the soil health recovers. It likely holds customary land tenure that cannot serve as formal collateral. Its returns, so healthy soil, long-term resilience, what else? Carbon sequestration accrue over horizons of 5 to 10 years that conventional loan cycles may not be built for. So while the investment case is real, we often find that the architecture to finance it does not yet exist at the scale that we need on the continent. I would like to point out that capital is not the only barrier here. So consider the EUDR, the European Union Deforestation Regulation, which now demands of West African cocoa and palm oil supply chains, for instance, to meet certain traceability and due diligence criteria. Large operator compliance came into force last December, and the smaller players, compliance for the smaller players follows in June of this year. That regulation requires traceability and due diligence at a level of specificity that many supply chain actors before now have not been required to meet. Many startups that are building the platforms to make that possible are under-resourced and in a race. But the gap in that race is not merely money. It's often the absence of an actor who understands both the standards regime in Brussels, for instance, but also the nuances of supply chain realities in Cote d'Ivoire or Ghana. Such an actor, even when they exist, are frequently members of the African diaspora. Let's consider cold chain. Sub-Saharan Africa loses about 30 to 50% of key agricultural commodities after harvest, roughly 4 billion in grain value annually. It's a lot of money. The infrastructure that would change that requires engineering expertise, food safety knowledge, supply chain management capacity alongside financing. All these tailored to context. In many value chain, that talent gap is arguably even larger than the capital gap. So, having set that scene, let's add what we all in this room have experienced over the last 6 months. The institution that arguably built more agri-food system infrastructure across the continent than any other has effectively been dismantled. Traditional donor support that African agriculture depended on is declining sharply, and governments are struggling to fill the gap as debt service consumes more of their budgets. Many of you are living the downstream consequences already in your organizations, in the programs that you work on. The question this room is best positioned to answer is this: what fills the space? What forms of capital, diaspora capability, market design, institutional architecture are capable of absorbing these disruptions and building something that is durable in its place? That's the question we're here to deliberate. Not whether it can be done. I think this room has enough expertise for us to know that pieces of that answer exist. But I imagine that what we're trying to do is to ask what it would take to organize those pieces into something that holds at scale and where the real leverage is. This evening moves in 2 registers. It will start with a fireside chat, one that is designed to engage at the level of systems, the trade and policy infrastructure, the market architecture, the institutional conditions that can either enable or constrain what we're trying to build. And then we'll move to the panel discussion. The panel discussion brings it all to ground. We have practitioners, investors, and researchers who live inside these constraints and know where the seams are. Tonight, they might not offer us a silver bullet. So if you're expecting like, this is what you're expected to do, we might not get that. But we expect to leave this room with a sharper, more specific, and more honest understanding of what actually this would take. So I would like to welcome Mr. Nicholas Bassi to take us there. To briefly introduce him, Nicholas has built his career at the intersection of diaspora engagement and development outcomes as Deputy Vice President at the Millennium Challenge Corporation, as Managing Director in the Private Sector Engagement Hub at the USAID, all the way to what he does now as the Chief Operating Officer at the African Diaspora Network. There, he now leads operations and programming at the heart of diaspora investment, the diaspora investment ecosystem. He's also earned degrees from Morehouse College, and he's an alum of GW himself. So please, let's give him a round of applause and welcome him. You're welcome.
Good evening, everyone. I'd like to join. Spent a lot of time in this building a couple of decades ago. I won't tell you exactly how long ago it was, but it's good to be back. So thank you for giving me a good excuse to come back here. I'm Nicholas Bassi, and as was mentioned, I represent the African Diaspora Network, which is a nonprofit organization based in California. I know there are at least 3 people in this room, Liesel, Johannes, I thought I saw Magdi in here as well, who are very familiar with the work of ADN. We engage diaspora communities, especially through our annual African Diaspora Investment Symposium, which happened just about 3 weeks ago in Silicon Valley. We engage diaspora communities and allies around how to best create ecosystems that nurture entrepreneurship and mobilize investment through intellectual and financial resources aimed at a prosperous mutual future. Our work is about harnessing the collective power of the global diaspora and catalyzing it to drive entrepreneurship, drive partnerships, facilitate knowledge exchange, all of the things that have been mentioned here today. This is something that I'm both extremely interested in and deeply passionate about. And there's no place I'd rather be right now at this moment than right here with all of you. So thank you again for the introduction. I could introduce my esteemed panelists, but whatever I say would not do them justice. So I think what I will do instead is perhaps give just a minute or so for you to say whatever you would like to say to introduce yourself, and then we will get into the conversation. Does that work? Dr. Eleni, would you like to start?
Sure. Good afternoon. Can you hear me? Yes. Delighted to be here. I think this might be my first time at the Elliott School of International Affairs, and it's always nice to have a first time. I'm currently executive in residence at the McDonough School of Business at Georgetown University, where I lead efforts to develop and build out an Africa strategy for the business school, and also work with students on innovation and venture on the continent. Prior to that, I was Chief Innovation Officer at UNDP Regional Bureau for Africa in New York, where I founded and led the launching of what we positioned as the world's largest blended finance venture facility for tech startups in Africa called Timbuktu Africa. And prior to that, and I could go on for a while, so let me just say that the most probably well-known thing that you might have heard is that I also was the founding CEO of the Ethiopia Commodity Exchange. I'll stop there.
Thank you very much. It's a pleasure to be here with you.
Thank you.
Sir.
Good afternoon, good evening. Can you hear me? Is it on? My name is Nnamdi Kalu Ezera. I am the president and CEO of the Diaspora Africans in Trade and Investment, DATI, which is a private sector NGO dedicated to enhancing trade and investment between the continental Africa and its global diaspora. We define diaspora as Africans removed, whether voluntarily or involuntarily, from the African continent within 1 generation or over 20 generations ago. So that is inclusive of Afro-Caribbeans, African Americans, and all the other African diaspora communities around the world. Prior to this iteration of my life, I spent a few years with the U.S. Department of Commerce, a commercial law development program, where we were working, for me specifically, Sub-Saharan Africa Senior Council, providing capacity building and technical assistance to Africa to improve trade, again, trade and investment, primarily between the US and Africa. I think that should suffice for the time being. Thank you.
Thank you, sir, very much. I will note that I know we have more questions than we have time. I've been warned that they will turn my mic off precisely at the 30-minute. I'm just kidding. Nobody said that, but they might. So my goal is to help facilitate us through in a timely way through a specific arc of inquiry. So we'll start with structural landscape. We'll move to where interventions stall, and then we'll shift to a quick discussion of enabling conditions. And so if I might, Dr. Eleni, I'd like to start with you. So from ECX to Timbuktu, Africa, you've built institutions that respond to structural failures in environments where capital and capability exist, but the market can't or hasn't yet organized them to reach farmers. So looking at these organizations and their accomplishments so far, do you believe that the architecture or infrastructure is more responsive today, or have the obstacles simply changed or moved? If they've moved, where are they now?
Well, that's a pretty comprehensive question. Let me try to break it down, maybe in a slightly conceptual way. So the first thing is, answering a problem, and so obviously market failure, how to connect buyers and sellers in the marketplace. That was, what was driving the innovation that led to ECX, and to do so in a way that would, work in an African context, because the idea of commodity exchanges is not new. Chicago Board of Trade, the Tokyo Grain Exchange, hundreds of years of experience. But to bring that to bear in the reality of Africa and a country like Ethiopia was really where the, I guess you could say, adaptive innovation was warranted. But I don't think that idea could have, and by the way, one of the things I didn't mention is after founding ECX, and running it for a few years, I went on to create another company, a turnkey solution provider called Eleni LLC, where we ended up doing 7 different projects in other countries trying to set up exchanges. And none of them took off to the extent that ECX did. And I think that will now answer your the second wing of your question, which is, how do these things actually structurally take root? So I think what we saw in Ethiopia that made the solution to the problem implementable and scalable, which is the key part, is government will, and the willingness and ability to really commit and rapidly execute on policy change. And I remember in different interactions with the governments, initially there wasn't a full awareness of the extent of how much was going to need to be changed. And it, something that we can do this in a few months. And I remember sort of spelling out, we're going to need laws, we're going to need policy changes in the financial laws and telecom laws and banking laws. And, and the more we explain it, then there was this understanding that this was actually structural. It wasn't just a project. And to have the will to do that, I think, is what distinguished maybe our Ethiopian experience with other countries where we attempted to, to also do an adapted, tailored model. So that's, I think, one thing. So now, has that problem gone away? Do markets clear? And have we sorted out that problem? No. And if I had my druthers, we would see an institution that would continue to evolve, as we hope all institutions do. And now we're talking about AI, but a few years ago, when I was doing something completely different, which was working with startups in Ethiopia, one of the things that I was working on with a few startups was how to bring blockchain into a trading environment. How do you do a distributed ledger system? So all the things that we did with the system that we built at the commodity exchange, how do you now, evolve with the changing context of technology? And the same thing now, I think, with AI and all the opportunities and potential that that provides. So building as an institution and having the political will to do it is one thing. Building in the ability to evolve and rebuild as you go is, I think, something that we didn't actually get right. So that's I think one answer. On the Timbuktu question, or since you also took us to Timbuktu, that's a different problem. The problem there is 89% of capital coming into Africa is foreign capital. 83% of it goes to 4 countries, the big 4: Nigeria, Kenya, South Africa, and Egypt. So how do you diffuse capital flows to where innovation is? Because innovation is and should be everywhere, because problems are everywhere. And also, how do you change the structure of financing? And I know Magdi's in the room, so I'd love to hear. And I was supposed to be on that panel, by the way, with the practitioners. I don't know how I ended up on this fireside chat, because
I wanted to be on the best.
I was told I was going to be with the doers, because that's actually what I do. But anyway, so the structure of financing for innovation in Africa is such that there is such a risk. We talk about risk aversion and a misunderstanding of risk by foreign investors, but it's actually as bad or worse by domestic investors. Most of pension funds and domestic capital actually is invested outside of Africa. So how do you change that? How do you incentivize domestic financial mobilization? Israel in the 1990s literally created an initiative called Yozma to create a domestic financial venture capital industry that sort of force fit Israeli financial institutions into becoming venture capitalists. And that's how they explain the rise of the startup nation. And so this is something that, again, we're trying to create that political will to actually, systemically change this current financial structure. I don't think we're there yet, and I think I could go on for a long time about Timbuktu, but that's, I think, the challenge on the ground. And with the doers panel, I would love to hear a little bit more about what some other folks are thinking about this.
Thank you for that thoughtful and comprehensive answer. I would love to chat with you at some point about the point that you were making about the misperception of risk and how it resides external to the continent as well as on the continent as well, because most of the conversations I've been part of have been talking about misperceptions of risk by people from the outside. So I would welcome your thoughts on that.
Okay.
So you and I actually were talking about risk in the preamble to this meeting starting as well. I'll shift though. The African Continental Free Trade Agreement, it exists. Remittance flows are at historic levels, and there are more diaspora organizations now than ever. Given all of that, what would you say the policy and investment landscapes are actually structured to do? What forms of diaspora participation, in your view, do these kinds of structures either promote or prevent?
He's not giving any softball questions. I think very interesting. Let me take a step back,
Please.
and let's look at the structure of not necessarily investment per se, but rather those organizations that are assisting those who would seek to invest. And I think the idea that most of us in this room probably would not fall into the category of where I'm going with this answer, which is that much of the U.S. engagement, for example, with Africa, sub-Saharan Africa, has been mired for, I don't know, 50 years in what I call the feed and medicate paradigm. The feed and medicate paradigm, for those of you who, I came up with this statement myself, so you don't need to know what it means. But essentially, we react to Africa by saying we have famine, we have hunger, we must provide food. We're doing our best. We want to provide food, and we have diseases, we must provide medicine. Rather than saying we need to be investing in agro or agri-food, agribusiness, rather than saying we need to be providing pharmaceutical infrastructure and or tertiary medical care hospitals. We have instead focused on the charitable nature, if you would, and what Africa reportedly needs. In this same time frame, this is the time when the fall of the wall happened in Eastern Europe, and the U.S. and the Western European efforts towards the counterparts in Eastern Europe were focused on, interestingly enough, democracy and trade and investment. Trade and investment, which would allow them to grow and develop so that they would not fall back into the dreaded former communist governments that they came out of. So, in this time frame, what we've seen is a focus instead of on this type of infrastructure that we're talking about, where we are looking at investing in all of the things that would enable agriculture, enable growth and trade. We were focused on the short-term answers to many of these issues, whether they be famine or disease. And so in that time frame, one could measure the difference in the development, if you would, of many of the countries who, at the time that they came out from the behind the Iron Curtain, were poorer and less developed than many of the African countries. I'm now dating myself. I was in Albania in 1993, and and I saw people going down the highways with carts and straw, and but the U.S. never said, "Let us figure out a way." This is the poorest country in Europe. Let us figure out a way to give them food and or medicine. And it begs the question why that is. We may not go down that path, but yeah.
Yeah, I actually have a question related to that, and it's kind of where things stall. And I was in Albania probably 10 years ago, and I did see a few, but I didn't see very many people going down the roads on carts. So that I think is indicative of the point that you're making. So my background is in development, and I've noted that often where technical expertise is required, the default has been to import it rather than to leverage people with the know-how who are local or members of the diaspora who have who know contextual information as well. Why do you think that our system, this is a question for both of you, why does our system, and I'll put that in quotes, consistently default to importing expertise instead of leveraging diaspora or local capability? Curious about your thoughts.
I'm not sure that's true anymore. In 2004, I was a senior secretary economist at the World Bank. I went to a conference in Ethiopia where I had been asked by the bank to, actually it was in 2002, the conference. It was during the big food crisis where almost 14 million people were at risk of starvation, and government was asking itself what it had done wrong despite having an agricultural led strategy. So I remember the lead economist at the bank, and I was working in Central Africa. He asked me to go to Ethiopia and present my doctoral research, which was on grain markets. And the last chapter was on how Ethiopia should have a commodity exchange. So I'd never actually spoken to policy people in Ethiopia before that. I just had done my research and come back to the US and got a job at a think tank, and from there the World Bank. And, so that was my career track. So I of course, wanted to do the conference. I went, and as it happened, the prime minister was in the room. And as it happened, something about the idea of a commodity exchange got his interest. The government, I guess, convened about it. And I was called back to discuss it. And then from there was a formal request that the bank should second me to Ethiopia to work on this project. And the bank didn't want to do that. They said there's a policy. We don't send people back to their country of origin. That's not how we do business. So we went back and forth for, I don't know, 6, 7, 8 months. And then finally I just said, well, I'm quitting. And I kept telling them, I'm not leaving the bank. I'm going to Ethiopia. That was the story. That this is just an opportunity I cannot miss. I've literally been waiting for this my entire life. So when I went, I remember the country director of the World Bank saying, "This is," because I left the bank. I got a contract with another entity that paid my salary, and then I was able to go. So, but I'm sorry, I'm giving you a little bit of a context here, but the point is, it was such an unusual thing. First of all, the bank was very clear that this was not their policy, but also the Ethiopians didn't quite know what to make of it either. They were sort of like, are you one of us or are you one of them? Because that's the paradigm, and you can't be both. And I remember after I got there, the World Bank country director, very nice man, Ishak Diwan, who later on went to Harvard, told me, this is a new thing. This is a new thing. You're going to, and his prediction was that because this was a strange animal, this insider outsider perspective, that either I was going to fail spectacularly or I was going to, be amazing or brilliant. And that was his sort of idea, prediction. And I hadn't really thought about this idea that I was an insider outsider. I didn't speak the language very, very well. I had done my research on Ethiopia, had gone around the country, but again, really as somebody that had spent most of my life outside, it was exactly 30 years I'd lived abroad when I returned to start this project. Why I'm saying all this is things have changed very dramatically since then. That was 2004. My entire extended family thought I was insane. Some of my relatives were very opposed to the government, didn't speak to me for years. They felt I was, switching sides or whatever. The expat community also didn't quite know what to do with me. So I would be invited to dinners at embassies and they would sort of not be, is she a local? Is she an international? So long story short, now the model that the diaspora is actually this insider, outsider, insider is actually a highly valuable asset because you've got the commitment and the heart for the local context and some affinity and understanding that is much harder to get as an outsider, as a full foreigner. But then you also bring all the skills and global knowledge and networks and access to, to networks and so on. So I think it's something that across Africa, donors and also international corporates have decided is actually a preferred model rather than bringing in somebody that has to spend a lot of time trying to understand what's going on. So I would say that's changed, if you will. So I don't know if it's a resort, but there were times where that put me into very, very difficult positions. And there was one time, in fact, I think now we can talk about it. It's been 20 plus years, but while I was running the task force to design the exchange, and it was all made up of national actors, heads of agencies, and so on, and it was very clear. I used to bring somebody with me to explain what was being said because I didn't quite understand the nuances of some of the double entendre and the double speak and so on. But it was chaired by the deputy prime minister and that task force, and he said to me one day, "You have a foreign passport. You come from outside, but your blood is Ethiopian. So I want to ask you to keep confidential everything we're going to talk about in this task force until we as a government decide when we're going to engage the international community." And then I said, why? And that was probably a very crazy question, but I asked. And he said, because we don't want our national agenda to be thwarted. Said in a local, of course, local expression, but we don't want to be derailed by consultants that come from every donor and that start to, spin our heads. We trust you, and we have a team, and you're going to lead it. And when we're ready, we're going to present what we want to do. So that's how we built the exchange. Yeah.
I'm going to jump in with an eye on the clock. I'm going to pose a question. You can exercise panelist prerogative to answer the question you want to answer or the one I'm about to ask. But so I'm curious about if there's one specific enabling condition, an institutional intervention, innovation, or policy shift, or coordination mechanism you think could help meaningfully change the flow of capital and capability in the systems that we've been talking about? What would it require to have some of these ideas be sustained beyond just a pilot? So that's the question for the table. Nnamdi, feel free to answer that one or respond to the diaspora question as well.
As much as I want to respond to the diaspora question, because I have a different perspective, and Dr. Eleni, I mean, she is Dr. Eleni, so she probably had a lot more respect than some of the rest of us in that perspective. Going back instead to the question that you've posed, I think there are a number of things that are in the mix. One of those has to do with unintended, perhaps intentional bias in terms of those who are in the room, who are the deciders of where and what to invest. The second, I think we still have to have policy reforms, government intervention that enables assistance to small and medium enterprises, farmers, enables aggregation without it be, without people losing their farms, enables adoption of technologies, crop varieties. We are, I know this isn't one, but this is, I think, the other, the one aspect, having said all that, is that we need to invest in sectors that that impact agri-food, that are adjacent sectors, right? In addition to inputs, you have inputs that are seeds, fertilizers, non-chemical pesticides, as I said, crop varieties. You also have sectors that are absolutely necessary, such as energy, both fossil and renewable, manufacturing, and this is what we talk about, agro-processing, food and beverage. We were talking about palm wine earlier. Ogogoro, I don't know if anybody, cassava, which is cassava gin and palm wine. Transportation, roads, rails, ports. Again, agriculture gives us pharmaceuticals, and research into those new drugs and investment into that type of research. Cosmetics, soap and palm oil. I think there literally is, in every type of soap, palm oil is there somewhere, right? Excuse me. And then other products that the diaspora is now interested in and is demanding. I'll give you an example. Ghana has this fruit called haki, and haki is something the Ghanaians don't eat. But the Jamaicans eat huge amounts of ackee and saltfish, right? So it seems that there's a connection there, right? There's also a very strong interest now in African dishes. If you're anywhere on social media, you're okay. We've tried the egusi soup. We're now going to make, and you're saying, wait, these guys are actually trying egusi soup and so forth. So the growth of all of these other sectors and the assistance that all of them make for agri-food, I think is important. So,
Thank you. You have a chair on it? Okay. I've been getting the side eye that we are out of time. So please join me in thanking the panel for sharing their expertise and their thoughts with us. Thank you.
Thank you. Thank you so much. That was fantastic. A lot of things echoed some of what we knew, but I think more interestingly for me personally, I had some assumptions challenged and questions, and we'll follow that. But before we get into all that, unraveling of what it is we just heard, I'd like to welcome Dr. Moses Kansanga, who will be moderating the panel. Dr. Moses, I will do what Nicholas did and let you introduce yourself because I'm finding that it's better coming from the people themselves, considering the caliber of people we have in the house. So please, a round of applause for Dr. Kansanga.
Thank you very much, Ma. Good evening to you all, and thanks for joining us. This is a familiar terrain with so many familiar faces. And I think the Fireside Chat did a great job of situating the structural and practical challenges with respect to agricultural development in Africa. I guess maybe we should be going home, or what do you think? Since this is already a fantastic job done. Maybe not yet. This is when the conversation is about to get more specific, more granular, with an excellent team of experts who worked in different capacities, both on the continent and externally, these teams. But before I call the panel members to join me, I'd like to say a couple of words about myself. So I come to the conversation with years of research on agricultural innovations in Africa. I started out focusing more on the production side, but in recent years, after seeing the volume of food lost, like Emma indicated, 40 to 50%, depending on the produce you are talking about. I've been drawn to look at service management of perishables, especially fruits and vegetables on the continent. And this is a critical area that both Diaspora support in terms of capital and even technical participation obvious. And I think that if we also think about the other two notes of interest to us this evening, aside from post-harvest loss or structural development, talking about traceability and agri-data development, as well as renewable agriculture, these same technical and financial gaps are obvious. So we are fortunate to be joined by Tope Pajimbesi. Please join me. Magdi Amin, as well as our very own Dr. Lisa Riddle. Please join me. Right, just following the norm, I would have you introduce yourselves, maybe starting with you.
Okay. Hello, everyone. My name is Tope Fajingbesi. I'm one of two owners of Dodo Farms. If you ever shop in DuPont Circle or Silver Spring, you probably know my husband. We farm on a 10-acre farm. We're both Nigerians. And so I think the reason why I'm here is because I also have a nonprofit called SheEO, and we work with solopreneurs who are in food systems and agriculture in Nigeria.
Thank you.
Yes, good afternoon, everyone. Pleasure to be here, and thanks for the invitation. Nicholas and Lainey, we haven't met, but two good friends. I was there for Elaine's journey, and actually, Isaac Dewan was my boss. I was at the World Bank, and so when he said either a spectacular failure or spectacular success, it was no doubt a spectacular success. He was right about that. I watched it all happen while trying to convince the government to reform. I now run African Renaissance Ventures. We invest in technology startups, primarily in East Africa. I spent a couple years in the government of Sudan, World Bank, Committee Our Network, and other places, and committed to the continent, and really hope to share some views today. Thanks.
Thank you.
Hello, everyone. I'm Liesl Riddle. I am serving currently right now as the Dean of our College of Professional Studies here at George Washington University. But my real hat I'm wearing today is I'm a professor of international business, and I've had the really great pleasure of now for 3 decades studying the work that many of the folks in the room have done, watching their career and their impact trajectories over a long course of time, and having the honor to chronicle it and amplify it and share it with the world and hopefully inspire more of this great work.
It's such a great team, like I mentioned earlier, and I know we don't have a lot of time to get through all the questions that we want to ask, but I could start with you, Dr. Riddle. If you would tell us about broadly your research. Those of us who have looked you up, we've seen that you've done so much research on diaspora investment ecosystems and across multiple countries as well. And we want to know what the evidence actually show about the relationship between diaspora intent and deployed capital. And if you think there is a gap between the two, and whether you see patterns across the countries that you have worked in.
Well, thank you for that question. Try to summarize that as succinctly as possible, because it is a very complex question. It sounds like a really good idea for a book. Anybody interested in writing a book? But in all seriousness, to describe the work that we were doing, I think one of the things, I'm a sociologist by training, and I am very interested in mapping institutional fields. And it struck me back when I was in graduate school doing research actually with the Armenian diaspora on a project that was, by the way, about Armenian church music for an ethnomusicology course. I kept introducing myself as I'm an MBA student, also doing a master's in Middle East studies. And they heard MBA, and each one of my participants, Armenia had just become independent, kept talking to me about how they are investing in Armenia, planning to invest in Armenia, want to invest in Armenia, and all the ways now that we refer to as diaspora investment. But getting to know that diaspora, I realized there's stratification within that diaspora within every diaspora community. Diaspora is an opt-in identity. You don't go get a list of the diaspora from anyone, anywhere, and be 100% representative. You know, I always say, when I want to call the diaspora, who do I call? And so one of the things that our research set out to do and did for a number of decades was to make partnerships, first of all, map the stratification in any diaspora, try to get willing actors representing the various different parts of that beautiful mosaic, go out into the community and galvanize support from leaders of various different diaspora organizations to go out and help us collect the opinion of the diaspora, what it is they're currently investing in, what is it they want to invest in, what's getting in the way, and why. And then we would aggregate those perspectives. And then we could serve as sort of an honest broker outside, that idea about being totally outside the diaspora, yet having partnership within the diaspora to be able to lay out a roadmap for various different stakeholders, including country of origin governments, including donor governments, other multilateral agencies, investors themselves, and private sector actors as to what the demand is, what are some of the things that we have to build structures around or mitigate against that's getting in the way, and most importantly, understanding the motivations. Not every diasporan is interested just to make money or to make money at all. So really kind of understanding down to the diasporan, to subgroups within the diaspora, to differences across diaspora, what really motivates this transnational economic behavior, so that when we try to market to them, whether that's a multilateral agency, whether that's a home country government or some other third actor, we are speaking to the heart and mind correctly. All of that anchored in the voice of that diaspora, not what somebody thinks the diaspora wants, particularly some outside actor, what they might think it wants, research based. So what's getting in the way? First of all, a lot that gets in the way sometimes is not doing that kind of study first. And I don't mean that in any kind of self-serving way. I don't do those studies anymore. There are other people that do them. I have nothing to gain from saying that. But what I think is very critical is I've seen too many times, whether it's an economic or even just a political policy that is rooted in what one diaspora member says, as opposed to science, usually leads us sometimes very deeply astray. So I think we have lost a lot of the institutional infrastructure where the support mechanisms were there for those kinds of mapping studies, number one. But I think the other thing that's getting in the way is that we do also remember this is business after all. So for those that truly are looking for it to some degree financial return, what are the things that come up on our surveys? They're the same things that get in the way in any doing business in survey. It's the same kind of institutional challenges that we need to address in many countries to make it an attractive environment. I said it was going to be succinct. It wasn't, and I apologize.
Great. So bouncing off your point on feasibility analysis, mapping, generally the business environment, I'll connect with you, Magdi, on post-harvest loss infrastructure, which is an area that is dear to me personally. We know that the market potential is out there, and the business logic is pretty much straightforward in that sector. But based on your work, what do you think are some of the stumbling blocks, the challenges to investment in this sector? Is it even investable at all? The area that people should venture into, and if it is, what should people be looking out for?
Coming from you, the specialist in post-harvest, it's a little intimidating to be answering that question, but I'll do my best. I'll try to connect it to some of the other issues we see in investing in agriculture and even diaspora. So just maybe taking it backwards. So in terms of diaspora, all of our founders so far, with one exception, is diaspora returnee. So the diaspora brings capital, but really, it's really the non-capital, at least from our experience. We have diaspora investing in our fund, but the biggest impact is the fact that you have founders who've spent some time, universities and work experience, and then go back and build. And so if you're here in the room and you're thinking about it, I can tell you that I've seen a lot of success in that. Broadly speaking, on agriculture, we've looked at a lot. We've invested in a couple, and they're doing quite well. Where it's a challenge from a venture standpoint, and I'll get to Eleni's point as well. She made a really important point about bringing African institutional capital into the space. What we tend to find in agriculture, and it may relate to post-harvest as well, is that for venture investments, we're commercial. We're not seeking sub-commercial returns. Scale often requires more capital. They're not asset light. You cannot scale up one-to-one, or it's not like more or less a software or other asset light investments where you've put in the capital and through effective execution, governance, they can get a very high return on that capital. Often because it requires equipment to reduce either those post-harvest losses or remote sensing or many other models that we've seen, they require a capital structure that includes both debt and equity, and sometimes some concessional, so blended finance solutions. And I would probably connect this to post-harvest losses. We've seen tremendously successful investments that get to that 40% of loss that happens. You can think of it also like there's many successful models in energy efficiency where you can invest in equipment that reduces energy costs, and from that margin, it repays the capital and a return to the investors. This is the same way. If you reduce that 40% down to 15%, something close to global averages, then that margin is an investable proposition. But again, it requires capital because they are physical investments, but we've seen, particularly the cold storage, getting that cold storage chain, but then how do you make it venture investable? You can often layer technology on top that, for example, better manages the logistics itself so that those assets are better utilized, include some remote sensing. Again, it comes back to the combination of those things plus knowledge and execution. You can reduce a lot of post-harvest losses simply by how you grade and sort on farm, even before it gets into the post-harvest chain. And a lot of those things are not done. The kinds of things that Eleni did, not just the ECX, but for example, having warehouse receipt systems or others where you reduce the amount of handling and logistics costs simply by being able to deliver your product somewhere and somebody else can pick it up from another warehouse, but because of the standards have been set, they're getting that product that they've contracted. So there's a lot of innovation here, but finally, let me just make that point that with the right de-risking models, we can unlock, it's already starting to happen, African institutional capital. So there's $4 trillion of institutional capital in Africa. We talk about our $100 billion that we're sending back home, but that money that we're sending home needs to be sent home. We're going to be doing it, and it needs to go to the consumption needs that we have from our family members. I'm from Sudan. A lot of family members need help. But if we can also use some of that, or at least our brain power, to help unlock that $4 trillion, which is now about 600 or so million, is starting to go into private assets on the continent. If we can move the needle there, we can do much more than 100 million. And so I would maybe hopefully can come back to that. I think I've spoken enough, but maybe if there's a second round, we can dig into that a little bit more.
Definitely. So much. I think on the question of scaling and also leveraging African institutional capital, I think we can take the conversation to a grounds up level with you, Tope, who has experience actually working at the grassroots level. And I would like to ask, based on your experience doing this over the years with multiple organizations, and actually building one of these organizations from scratch, where do things mostly consistently break down when trying to create value across these systems?
Thank you very much. And I've been taking notes like I'm back in school. So I want to say that what has informed the work that I do in Nigeria is really holding up a mirror to the work that I do in the US. In my daytime job, I'm the CFO of an international nonprofit. So when I see how hard it is for us to raise money in today's climate, I then think about a nonprofit that is based in Nigeria and how hard it is for them to raise money. When I think about how hard it is for us to raise capital for our farm in the US, I think about how hard it is for somebody in Nigeria or elsewhere to do the same. But what really informed me to really go into this work, especially was during the pandemic. I used to be a professor of agricultural business at the University of Maryland. And one of the classes that I taught was leadership and teamwork in agriculture. And that's a project-based class. The students will send them out to go do stuff, but COVID, nobody could go anywhere. So I came up with an idea and I called a professor at the University of Lagos in Nigeria. And I said, I want my students to work with your students to come up with your first small farms conference. And so when the students are presenting the stuff in class, I'm thinking about some of these problems that we take for granted, that people back home, I'm Nigerian, are facing. And so I thought, now, if people who have partners or who are men are facing this problem, what about the women? Because we know that roughly 50% of businesses are going to fail in their first 5 years. And that's whether they are owned by a man or a woman. As a matter of fact, one of the first slides I would show in my class would be the statistic of Maryland farmers. In Maryland, where I live right now, 51% of farmers make less than $9,999 a year from farming. And that's why the average age of farmers in Maryland has been going up steadily. 57, now it's about 60s, in the 60s. So so now think about this. And I thought, how do we translate this to Nigeria? So we started to work with women who are in agriculture, food systems, alternative energy, and healthcare. These are vital areas where women put, human capital, financial capital in, but it's hard for them to compete. It's hard for them to get capital. But beyond capital, what is hard for them to do is to have advisors. I'm a CPA by training, so I've seen my fair share of failed businesses. And so I look if I could advise a client to put money in a business, I would say you must put money only in a business of somebody who has been trained or who has advisors. So, and that's the gap that we're trying to fill now. With the women who we mentor, we know that they are struggling to raise capital. But what we want to do is to make sure that they have the expertise, they understand how to price, they understand quality, they understand human resources, they understand how to attract some sort of capital, human capital in their own in their businesses first. And we form like boards of advisors around them to advise them, for them to come with their problems. Just come, it's like a therapy session. You have your advisors and you say, this is the problem I'm having, then they help you to solve it. So what I think that we need to think about as diaspora members, and I like what the professor said about that one diaspora comes up with an idea and then people just think that's fact. Now imagine how I feel when the person who is coming up with the idea is not even a diaspora member. I'm like, people, stop. But what I think that where I think we need to close the gap and where we're trying to close that gap is to make sure that when we are filling this, when we're helping these women with their businesses, we want people who understand the nuances, the context, who understand the culture, to be the ones talking to them about pricing. I'm from a part of Nigeria called Ijebu. If you know people, Ijebu people were very tight-fisted. So when somebody is Ijebu and then they went to study accounting, they say you have a double degree in economics. So, if I'm talking to somebody who is in Nigeria and they're talking about money, I understand the context more than somebody who does not. So where I think that we need to pay attention is, I don't have money to give somebody who is doing business in Nigeria, but I have expertise. I have a listening ear. And so everybody in this room can actually give something to whatever diaspora they think that they identify with. So I'll stop preaching at that level.
Thank you very much. I'll come to you, Dr. Riddle. I think so. I want to connect to Tope's point about these ground level issues to find out from your research why you think the diaspora knowledge and network contribution is still fragmented more broadly and difficult to organize overall. And what is the mechanism of the failure, and who do you think could be a good player to fix this?
Oh, that's the big giant question in the room. I think one of the things I like to say a lot is that it's trust, but not capital, is the binding constraint. And so much of these issues related to the role of the diaspora in development, or even broader in diplomacy. I think what works, well, I'm particularly struck by some of the people in the room who are great exemplars of this. Where I've seen it work really begins first and foremost with not one, but a group of actors who are very passionate, committed, and entrepreneurial, who commit to not just work on their own, but work together in concert. Usually not in the same area, but in areas where there is sort of overlapping strength. And as they do that, they then they sort of develop a web of trust-based actors around them that can snowball. But what's really critical is that the mutually reinforcing work of that web of trust diaspora network, that needs to be shared. And one of the things I'm worried about the current environment is that we have lost a lot of the big major convener roles. Actors that used to be, their main function was to bring that web of trust set of actors together to show that it can be done. And actors who, I was just saying earlier before, I'll just share this, Dr. Delaney and I were actually on a panel here at George Washington University 20 years ago at the Ethiopian Diaspora Investors Forum. Johannes used to organize. And she was just at her idea stage, beginning stages. And I saw a room full of diasporans tell her she couldn't do what she was going to do. And can I tell you how valuable it has been to have convening events subsequent to show it could happen? Because that inspires the next generation. And we talk about sort of the sustainability of this. It's the entrepreneurial problem of what's the next generation. The next generation has to see and learn from the exemplars of the previous generation. A lot of people would criticize, I think, certain actors in the development space that convenings was a bunch of fancy dinners or lunches, or the same thing is said over and over again when the same group of speakers are speaking. And perhaps some of that is certainly true. But what I saw, and I bore witness to, was that system creating ripple impact effects. And I think that is, and I think universities, quite frankly, have a huge role to play in that. The last point I will make, because I know there are a lot of students in the room, I am struck by the professor's comments about getting students involved. I cannot say how important it is for universities to embrace their diaspora students and inspire them to be the next generation. I think what we do here in the IDS program at George Washington University, what we will soon be doing in our new Migration and Diaspora Studies program coming to George Washington soon, hopefully next year. That is where we can bring the exemplars back. We can bring these trust-based networks back to inspire the next generation. So it's trust, it's not capital necessarily. That's a binding constraint.
Great. So linking to your earlier point, Magdi, about African institutional capital, and bouncing off your very hopeful message about current and future generations, and just how to inspire these groups. I think working at the George Washington University, we have some great students, both diaspora related. Students who have come up with excellent ideas in the food sector. I've mentored at least 2 separate groups who have wanted to create solutions, whether in the area of food waste, and I think the other one was on the monitoring of crop health. So these are wonderful ideas. And linking back to your point, Magdi, about African institutional capital, I want to know, when practitioners invoke alternative capital more broadly, what do they actually mean in this context? What structures exist which will need to be built from scratch to and by whom to leverage the potential of such capital, especially to support these startups that are led by the youth in agricultural development?
Okay, well, what's meant by alternative, institutional capital, they need to return money to, let's say, the insurance, those who are providing, whether social insurance or just regular health insurance, they would need to be paying out claims. So they have a fiduciary obligation to manage their resources safely. What's considered safe, I don't know how safe it is anymore, is let's say US treasuries or international treasuries. Right? And so a lot of African capital then therefore leaves Africa, where actually the true deeper incentive, if they really want to pay out claims, is to have Africa grow and productive Africa develop. So, alternatives would be considered, let's say, private equity or venture capital, which is the startup version of private equity, which is a bigger pool. Yale was the endowment here in the US that sort of allocated a fairly large share, I think it was 40% of their endowment, into alternatives and had spectacular returns. And then there's more of a movement among endowments here. Now, going back to your question. So first of all, I'm going to sort of start from the bottom and then get back up. When we look at ventures, we often find that the well-meaning donor-led capital, or let's say people who are willing to trade off impact and returns, is they fund ventures in a way that almost makes them impossible to scale. They'll give them soft money in a way that they'll build out large teams or develop solutions and approaches in a way that creates a cost structure that's too heavy to then scale commercially. We often walk into ventures, very beautiful presentations, a nice sort of lavish breakfast, and maybe etched glass sort of logos. Like, this is not going to work. I should tell you already. You don't have to say much. We know that you've got a lot of donor support, and that's. But what's worked in our case, so we have a couple of investments that are ag-related. So Africa has smallholder farmers. They don't sell directly to end consumers. They typically go through aggregators, which could be a processor, could be a cooperative. We've invested in a company that digitizes those cooperatives and therefore has production and quality history of every farmer selling to the cooperative. Using that information, they credit score every farmer and lend to them on their phone in a 5-minute process. They've grown their loan book. It's 100% annual growth in loans. And these loans are like $500 used for maybe another cow or seeds or fertilizers, as you mentioned earlier, or even their getting ready for post-harvest. So those are the kinds of things that work, where it's commercially designed, leveraging information to make better use of assets that are scalable and that are designed from day one to be commercial. Where I'd love to see, getting back to unlocking institutional capital, is that donor money going to help de-risk perhaps first loss and knowledge and information that helps institutional money that has never invested at that level feel more comfortable doing so. I think the diaspora can play a role there. I love Tope's point on knowledge and information, because as diaspora, as a Nigerian, she understands what the language that those farmers are speaking. We have an advantage in understanding and being able to de-risk those opportunities. It's not difficult for us to help institutions also understand and better manage and price that risk. And I think the donors can play a much more constructive role rather than trying to distort individual things that make them feel better about doing something about Africa and farmers. Instead, helping to de-risk much larger pools of institutional money to invest kinds of things that can scale up logistics, cold chain, and technology that helps farmers in Africa.
Right. I think gender has come up significantly, especially from your submission, and women play a significant role in African agriculture, supplying a substantial amount of their labor force, but paradoxically controlling very few productive resources. For instance, land, as Inma talked about in her opening remarks, it's often there's no security around land ownership, especially for women. So I'd like to come to you, Tope, in your work. What do you think will need to change for diaspora knowledge to actually transfer rather than style at the point of application in helping women scale some of these challenges, especially linking back to the point about leveraging institutional capital? What do you think can be done based on your experience?
So I think one of the things that I like to, as somebody who's an accountant, people always think I start with the money, but I like to start with something different. And I think you've raised a very important point about gender and, you know, how at disadvantage sometimes women can be. And I always try to see what is the reason for the disadvantage? What's the reason for the lack of access to capital? What is the reason that our businesses are failing? And just to note that in these businesses that fail, many women's businesses don't fail. What happens is that they don't scale. They don't scale, they struggle. There's all kinds of things that it holds women's businesses back. So you see a woman in Nigeria or elsewhere who has had a business for the past 40 years, but the revenue has not grown. The debt to asset ratio is out of this world. But one of the things that I've realized is that for many of us women, a lot of donors, a lot of trainers, a lot of helpers are not addressing the real issue. What's the real crux of the issue? In 2024, I had my first child at the age of 47. Now, that's a big health issue here. And now to compound the matters, my child was in the NICU and CICU for 4.5 months. So it meant that I was the CFO of a nonprofit that I was, overseeing 35 countries. First of all, I had to leave the job. and camp at Children's National Hospital in DC. And my businesses suffer. Things happen. This is what women face. These are the barriers that we need to address first before we address the issue of capital. Because if somebody gave me their capital at that point, could I deploy it? No. If somebody already invested in me and I didn't have, any, backup or, that sort of risk, their money will go down the drain. So how about we step back and really give women entrepreneurs an avenue to really be mentored in the areas where they want to be mentored? And I want to give an example of this. In 2014, I had just come out from a divorce. My father was just diagnosed with a stroke in Nigeria. My mother just got diagnosed with dementia. But I was a very top director in an organization that shall not name in DC. And I was on a course that was sponsored at the University of Oxford in the UK, where I was in the room with just all the women I wanted to talk to in this life, but I couldn't say a word because I had other problems. Because I was thinking about my dad, I was thinking about my mom, I was thinking about divorce, I was thinking about domestic violence, infertility, all these things. What opportunities do women entrepreneurs have to have these conversations? In what rooms are these conversations had? And then we expect that we will do well? No. In what rooms do we have conversations about unpaid childcare costs? So I think that before we can say we are investing in women, we need to, understand these barriers exist and create opportunities for women to have these conversations. Because most of the time when we're told, when we're told there's a room where these conversations can be had, that is half of the problem solved. If I know I can go into a room and nobody looks at me funny because I just had a child at 47, and somebody can really understand and, tell me a solution, I think I'm able to emotionally and mentally run a business that way. So let's start creating those spaces.
Conversation got real quick.
For a moment, I think I'm short of words. Thank you for that very personal exposition. It brings so much meaning to this discussion, but it also gives us a very clear picture of the things that will come together to unlock diaspora investment. I think your position on gender being an underlying issue that has to be addressed, right? And Dr. Riddle mentioned trust as a core, a fundamental issue. And I think Magdi was talking about unlocking capital. Based on these three different areas, I would like to ask if in your professional practice, if you have seen any well-functioning system, or even to the very local level venture that has done this well from the perspective of gender, from the perspective of trust, and also capital. What did they do right, and how can this be an example for others in unlocking the potential of diaspora capital, not just financial, but also the technical component of it? Maybe I'd like to start with you, Dr. Riddle.
Before I get to that, I want to add one more thing. Sorry, I'm a woman on the other side of the panel. So I want to say there is another flip side to gender that we haven't addressed that I think is important to say in the room, and that is gender impacts diaspora investment from the investor side as well. And, I'll give you an example from the African continent. So when we mapped Sierra Leonean diaspora investor interest in the United States, Canada, and the UK, during the Ebola crisis, this is a project we did that I spearheaded for the World Bank. One of the things we noticed in the data, kind of inductively, is that women were as equally interested in investing back in Sierra Leone as the men in the survey, and we had a good, robust set from both sides of the gender divide. But what was interesting to note is that statistically significant difference between women who were interested in investing in portfolio investment primarily, meaning arm's length kind of investment, versus direct investment, whether that be real estate for personal commercial use, setting up a business, and so on. And it was one of the very few things about patterns that we noticed that were similar, regardless of whether that diaspora was in the US, the UK, or Canada. So we looked to our qualitative research, and because there was a qualitative component to this mixed method study. And what did we find? We found much thick, rich documentation of women who were very educated, who had set up very successful businesses in country of residence, who had the capital, had the motivation to go back and invest. But somewhere in the process, whether it was the investment investigation period or startup or initial launch, somewhere in there, there was a story of intense gender-based discrimination, harassment, and in many cases, more than you might imagine, perhaps violence. And so it caused us, when we presented these results back at the World Bank, it caused us to sort of say, look, any study that talks to you about this great potential of diaspora capital as a tool for development, we have to take 50% of that off of the shelf, or whatever that corresponding percentage is in terms of how it plays out in diaspora, if we are not going to be able to address some of the issues getting in the way that affect not only the domestic audience, but also that transnational capital transfer. And that goes back to women helping women, women in diaspora, women domestically making networks that help, one another in the short term until we get the greater gender divide issues that are very deep worked out anywhere in the world. So that's just something I wanted to make sure, because often we talked about the gender-based issues in countries of residence, but we forget that those things play out in diaspora and impede capital transfer in all of its forms: knowledge, human, social, political, and financial. You asked what helps to unlock, but I think that I just addressed the gender-based issue, but I will come back to the need for transnational organizations to create convenings, to create investment funds, and to create strong communication channels here and there in countries of residence and origin. And the African Diaspora Network is a good example of striving to accomplish all three of those things. It's not the only thing that solves a problem, but it is certainly a very big part of the solution.
Strong communication is absolutely central to trust building. Agdi, would you like to add to
gender? I feel
I
feel like we're bookended by some.
Yes, so
Who am I to come in and
maybe broadly,
I'm happy to comment.
sure.
So just the context is that Africa only gets about 1% of global venture. And Eleni made the point that 70% or 80% gets concentrated in the big four. So basically 50 countries in Africa are splitting 0.3% of global venture. So we have an overall problem. We also have a gender problem. So there have been some institutions like MasterCard and others that are focused on funding female-led venture firms. We target 40% of our investments to be in companies that have a female at the C-suite. And again, we're commercial. So we see this as a commercial opportunity, just as we see that problem that Eleni spelled out as an opportunity. So if, because of your cognitive biases, you're not looking at Africa, I'm going to take advantage of the fact and look at it because the economics are there. And if you can't see it because you don't like to invest in Africa as you don't understand it, then I'm going to take advantage of that and invest. And when you eventually see it and eventually, start scaling up that, just as people had the same biases about India, about Latin America, and about East Asia. Those markets will grow, and we know the demographics and the energy and the youth and the digitization level of Africa means that it will be the source of growth in the future. We'll already be there by the time you figure it out. The same is true for women. So if you have some bias that you think only men can manage businesses and capital, then we'll take advantage of that and sort of go and invest in those markets, because your cognitive biases are preventing you from taking advantage of those opportunities. Just to give you one example, I shared one example on Imata, and so that company that does the digitization of cooperatives. Another one we invested in uses drones and AI to supervise infrastructure projects like stadiums and airports. But what they find is they also, as you were mentioning, supervision of agriculture. When they do that, they've discovered that they can predict where malaria will breed on farms based on topography and vegetation, water flows, to be able to reduce malaria by 93%. So they intervene at the larval stage before it actually becomes mosquitoes. This success rate has caused them to spin out a venture led by a woman, the female that was at the C-suite, to scale this up, and they've now received $3 million to scale this up across Africa. Why it's important? Because that connectivity that Tope was talking about, when they're out there dealing with farmers, a lot of farmers in Africa are women. We understand that women are the backbone of many economies, and that's especially true in agriculture. So you don't have a woman in your venture, you're not going to be able to access and connect with your main client, who are those farmers. And the same would be true for anybody, any investment you do that deals with businesses or SMEs. So I think it's an essential, but I don't look at it as purely an equity issue, as it is an equity issue. I see it as an economic opportunity, just the way that Africa venture is an economic opportunity.
Right. Thank you. Ope, would you like to?
Yes.
add?
So I'd like to just highlight two organizations, one public, one private. The first one is the Obama White House. In 2014, the Obama White House convened the US Africa Leaders Summit. But that's not where the success is. Why I want to highlight them is there was a meeting before that summit that I was invited to, and I kept asking, why am I here? But apparently, I used to do a show called Impact Africa that I thought only me and my parents listened to. But apparently somebody in the White House listened, and they brought about 30 people in the room to talk about the agenda for the upcoming summit. But one of the things that I learned from there that has really stayed with me was that they said it was supposed to be African diaspora. And I saw people who were African Americans, people who were Caribbeans. And I remember standing up at some point saying, there are 1.6 million African diaspora. And one professor said, no. And gave me a hard number. And I said, who are the other people you're talking about? I don't know who these people are. And he said, what about us? African Americans? You people came here on planes, we came here on boats. So I was like, wait, to have those diverse voices in the room to talk about an agenda that was going to affect countries that we hold dear, I thought that was just A+. I haven't seen a lot of that afterwards. The second one, I also happen to be on the board, is a UK charity called Conserve. I was invited to join the board of Conserve 2 years ago. And I was like, I don't know anything about wildlife. These people do wildlife and forestation and stuff in conservation work in Africa. And I just did not understand what I was doing there, because I was way, out of my league. But last year we were in South Africa, and I really understood why they wanted voices like mine and some other people who were on that board. And now think about all of the Fortune 500 companies who say they are doing good for the world. How many of their boards or committees have people who look like me? That's where I'm going to end this.
Right. Thank you so much. Really quickly, I want you guys to sort of give me phrases on this question as to what do you think, given your highlights of different key points that are important to this common agenda, what do you think is both defensible and could meaningfully move the needle within the next 3 to 5 years? Yes, brief, very short.
Thank God I'm going last.
You want a phrase?
Well, a sentence will do.
I was when I think about this agenda, it's not going to be said. Sorry, bro. I just think that a lot of people see this as sort of helping and charity. It's not that. Like, there's some agency here. Africa will rise when we collectively want it to rise, and when we roll up our sleeves and take action. The opportunities are there. You just have to get yourself to do it. Let me leave it at that. If that's all you want, it's just a quick phrase.
Great. Dr. Riddle?
So I was thinking about trying to summarize this in one sentence, which you can imagine is challenging for somebody like me. Like if we design the right architecture, I think that's at the end of the day, building relational infrastructure, then diaspora capital and other capital will flow. But it's the architecture question that we have to solve first and foremost.
Thank you.
I'll say begin with the end in mind. And the end is that nobody's leaving this ship alive. So if you know you're not taking everything with you, then put your heart and your money where it matters.
Well, I'll hold myself to the same norm of just a single sentence in conclusion. I do think that the question is thought about whether change is possible, but whether we are willing to organize differently to unlock these opportunities. So we'll now take questions, prioritizing our online audience, if there are any.
Yes, and for those joining on Zoom, we ask that you type in your questions in the chat, and I'm happy to read that out loud for our panel. Yeah, I think in the meantime, we can start with people in the room, and we have mics that we can pass around. So you can raise your hand if you'd like to ask a question, and we'll bring the mic to you.
Good afternoon. My name is Todd Kirkbride. I am the managing director for an organization called the Scaling Community of Practice. So I've been attending a number of events this week through DC Climate Week and a number last week with the World Bank's meetings and forums. And I don't think I've sat on one panel or one meeting where scaling hasn't been talked about in very different contexts. So I do appreciate all of you raising the issues and the points here, but actually my question is going to take a step beyond that. And since we're talking about finance and capital flows and looking at the diaspora impact throughout the African continent, I am wondering if you feel that we may be at a tipping point for more local and regional domestic investment due to this paradigm shift that we are all experiencing with ODA, with the overseas development assistance. And I was at an event last week sponsored by DevX. It was their Impact House. And there were, I can't remember, it was a flow of 10 or 15 rapid fire events. And there was one that was focused on investment in capital. And what I found very interesting was they said they had a convening looking at, I believe, setting up a fund. And they had 12 organizations and participants offering their thoughts, ideas, and investment into that. And every single one of those organizations was based in Africa. They didn't have any outsiders, as you might say, bringing capital into that particular conversation. So from where you sit, do you see that this may be an opportunity as we redesign and hopefully redevelop what international development and international capital flow might look like because of the pullback and the destruction and the devastation that we actually see. Thank you.
So I'd like to say something about that, actually. So there's something in Lagos that they do every December called Dirty December. That's not dirty, DETTY, Dirty December. It started off as parties, a lot of people would just go parties and stuff. But one thing I noticed last year in the lineup was there was a lot of investment opportunities being showcased. I saw that shift happening. And I want to say that that shift is happening because of the things that are happening here. So now you have people who are calling and saying, you go to Nigeria, Lord, tell me, there's this real estate opportunity somebody brought for me. Should I do it? So you're seeing a lot of people actually taking their capital back home. And the Nigerian businesses and Nigerian people who are looking for capital are making it even easier by weaving it into parties and social circles. And you also see a lot of people who are developing real estate come here to Houston, to DC, to New York, Atlanta, and pitch investors. So things are really happening.
Just to add to that, so that, yeah, I think we're in a transition moment. There are a couple elements of it. Most of the conversations around, let's say, B20 or G20 in South Africa had to do with how do Africans do much more of processing, let's say, critical minerals or other resources on the continent. And there's a huge shift there in terms of the mindset. Like I was saying earlier, a lot of emerging markets go through these transition periods where they get sort of more or less discovered as investable opportunities. They're often triggered by reforms, and we can trace it back to things that happened in India in 2013-14 or Brazil around the same time, or Latin, other markets as well, and those are happening. But Africa is very, very diverse, and so there are some countries that are leading those reforms quite aggressively. I think Rwanda, Ghana in some areas, Senegal, Cote d'Ivoire, Nigeria as well. I mean, I think Nigeria has another driver, which is this very, very dynamic diaspora that is connected. So I don't think it's a one size fits all in Africa, but there's a broad-based transition, and some governments are really leaning forward and accelerating that, and the institutions are responding. So as I was saying, the annual report of the Africa VC and PE Association picked up the biggest delta. There's two shifts. One is more venture debt alongside equity, and the other is more African institutional capital. So these are all data points that signal that transition, some of which happened. We talked about the destruction under this administration. We talked about Obama's White House and all like that. I don't know. I feel like we need to come up with a phrase like "Make America Great Again," but in a wholly different context. But anyway, so I think that might have accelerated, but I think a lot was happening anyway.
And just to add briefly, so Ghana has what we call the Year of Return that has run for several years now. And it's actually going beyond the diaspora to attract African Americans who want to invest on the continent. So these are all opportunities that can help.
Definition. African Americans are the diaspora.
Okay. Great.
Correction.
So we have one question from, or a few questions from our audience on Zoom. So I will ask one of the questions, and then we can maybe tussle between our online participants and those in the room. So one of the questions is, where does the consultant class fit into this undertaking, meeting capital with people? Yeah. Okay. And the second question is, how do African Americans build the network in the US to put the diaspora in a better place internationally? Yes, so the first question is, where does the consultant class fit into this undertaking, meeting capital with people? And the second question is, How do African Americans build a network in the US to put the diaspora in a better place internationally?
Yes, I think you can join us in giving some responses.
I don't know whether we have to go to the first question. I'll leave that to you, but the second question speaks to why we created the Diaspora Africans in Trade and Investment. And that is, and why I interjected with Moses. Apologies, Moses, I didn't want to cut across you. But the idea that we have a definition of the diaspora that is more inclusive than has been the case. What I would call national diasporas are the people who have left a particular country within the last how many years or so. The global African diaspora is inclusive of all those Africans that left, whether voluntarily or involuntarily, within the last generation or 20 generations before. So that is inclusive of all the Africans who are African Americans, Afro-Caribbeans, in all of the other places in the world in which Africans have settled and have been settled over the last 400 years. So again, to speak to that question about the African Americans fit into this, reach out to me. As a shameless plug for Dati, right? And that also speaks to Tope, your Obama White House. This came out of that idea. So over to you.
Hello, everyone. My name is Ibi, and thank you so much to the panel for an insightful conversation. I'm going to shift gear a little bit, and because I work in the water space, and we're talking about agriculture, one thing I've not heard all through this conversation is the importance of water, or how we invest in water for agriculture, essentially. So, so my question would be, as people who have worked with investors, or you've invested, or you've been on boards or advisor, are investors in this space, are they, pricing water risk into their agricultural investments? And I'm saying this because roughly 91% of small-scale African farmers rely entirely on rainwater. Irrigation is still so far behind. As someone who did my some projects in Tanzania and working with small farmers, I've seen it firsthand, and it just brings me to wonder if some of this, if water is being priced into this conversation, or it's just been thrown out of the wood. Thank you. So I'd like to say something about that question, and I think we have to be very creative in our solutions. I'll put on my business CPA hat now. I was talking to somebody who works in the water space in Namibia, and they said the problem that they're having is that the elephants and the farmers have clashes, because the elephants and the farmers have the same source of water in that particular location. So he was trying to find solutions, grants and stuff. I said, you know what I would do if I were you? I will tap into, again, I'm coming back to Nigeria. This is the place that I know. The love that Nigerians have to travel. But I told him, I said, Nigerians don't want to go and look at elephants and farmers fighting. No. What they want is the soft life. So bring them to Namibia, take them to the lovely parts of Namibia, take their money, let them go see those beautiful golden sands, and take the profit from that to invest in water. So I think as business people in Africa, we have to think about innovative solutions like that. So.
Hello. I'm a big admirer of development, and I'm from El Salvador. I used to be I was appointed as an interim municipal manager for a region in my country. I served only for 3 months, and then I became political persecuted because there was institutional money involved from the Latin American Development Bank for an international airport, and I was on the opposition party. My question is, how do you, I know Africa is a huge region, but how do you think that institutional investment can also look forward development, but also stop political persecution to people that, like me, became a diaspora and returned to help in the development, but then you become a persecuted political person? Thank you.
Dr. Elani should answer that question. I think it should be you.
Look, I'm gonna take that on very, very indirectly. Maybe also on the water question. So a lot of conflicts in Africa, including the Darfur conflict, had at least some of the contributing factors is competition over scarce resources. I think the way out of bad governance, or that, I don't know the situation. So, you know, and I'm sure the Inter-American Development Bank would have its processes for addressing those kind of grievances and all those things. But me, I think the long view is, and you look at countries that kind of make it out of these difficult transitions that Sudan is in now, for example, is, and Nigeria was, let's say, you know, you go back to the Abacha years and that, or Ghana was, certainly lots of the rest of the world was, is that you need ownership in society along with good policies that create equity. But as you build out a middle class that can hold governments accountable, you start to change the balance where instead of a few people taking advantage of whatever the economic opportunities are, you have a much more broad-based middle class that also is taking advantage of those opportunities. Which is why when I went back to Sudan, and then that experiment in helping the government with its reform process ended with a military coup. But I didn't say, okay, well, I'm not going to focus on Africa. I said, what I would want to do is back the entrepreneurs and the innovators who are making a real difference, getting products and services to people, and indirectly as they grow and they spawn other entrepreneurs or other economic opportunities, you get more stakeholders in society that tip the balance gradually away from bad governance and toward good governance.
I think we'll take one more question from our online audience. Okay, so this is a bit of a long question. So one of our audience online said, I've thoroughly enjoyed the panel discussion, especially the strong emphasis on local investment and alternative funding pathways. Building on that, I'm curious about farmer cooperative societies. We know that smallholder farmers often organize into these groups to leverage social capital and strengthen their collective agency. However, access to funding remains a persistent challenge for many of these organizations. What practical strategies or innovative financing mechanisms exist to help cooperatives that got cut off? I'm happy to repeat the question if you'd like me to.
Cheers.
Is clear? Why don't you take it?
Go ahead.
Oh, those cooperatives, they're also, whether they're SACCOs and Continent, are also just more or less informal cooperatives, are being picked up. They're innovators who, for example, channel Diaspora from organizing communities and then channel it to other communities on the ground. There are fintechs who specialize in a platform to organize such cooperatives and then lend to them using that social trust. The whole Grameen model was kind of like that. So that is a pattern. You just need to, lean into it and find those opportunities and back them, either through funds or directly as any angel investors into those platforms.
And just to add, I think collaborations would be very important. Farmer cooperatives, from my experience, tend to work in isolation, But some of the success stories that I have seen, especially in Malawi, we have an organization called the Soils, Food, and Healthy Communities Organization that started from scratch as a farmer-led cooperative and ended up collaborating with the universities and is now an established NGO on its own. So I feel collaboration is super important, especially in the very early years of establishment, connecting with both national and external organizations, and that is why events like this one are really instrumental to that line of growth. So participating in these events and connecting with relevant organizations, and if you get to work with even one, you build experience, and if you are lucky, some capital to spur your growth. That's what I would say.
Just, we didn't really touch the consultant conversation. I don't know about a consultant class, but one of the things that has happened in the sort of destruction of U.S. aid is that there are a lot of people who have knowledge about Africa and a knowledge about development that then no longer are working in that institution. First of all, I think that they have a lot to add, and they have to, reposition what they're doing into new areas. But I would really hate to see that knowledge lost. So I think we need to find pathways, whether commercial, as I'm doing, or other ways, but still having that lens of, let's say, doing the right thing and using their knowledge and capability that they developed over their career to make a contribution, because a lot of institutions in the US and elsewhere will have to engage in Africa over the next decade if they want to be viable.
Yeah. Yes, I think we're at time, so we can wrap up this. No, I think. Did you want to add any final?
Those consultants should. Sorry, it occurs to me that the consultants, many of them who have worked for organizations that either USAID directly or were funded by USAID at the national level, that we have not actually looked at the question of the subnational level here in the US. If I'm not mistaken, California is the 5th largest economy in the world. I live in a place called Loudoun County, and I don't even want to know. No, let's not go there. But the point here is that the subnational actors are, if we can get them to understand the value of these individuals, they should be hiring them quickly and utilizing them going forward.
Thank you. Yeah.
Okay. All right. That was fantastic. And I think everybody agrees with me. It's been a well-spent evening. I personally think that I have more questions than answers, but I'm excited because I think they're better questions now. Just better insight into what it is we should be talking about, the notes that we need to be interrogating. A lot of things stayed with me. Trust building, de-risking the viable models that we have to unlock African institutional capital. We've talked about knowledge quite a bit, and that makes me really glad because I really wanted this conversation to capture things beyond just capital that tend to get lost in conversations like this. So beneath the capital question, beneath the governance question, the trade question, I think is the question of knowledge gap. I preempted this in what I wrote down, and so I'm happy that what we heard sort of, echoes that and speaks to that. What we do not have is a shortage of expertise. The expertise is in this room, and we've signaled quite a bit tonight that it's also in the spaces that we're trying to build in and build for. But there is a gap that we've heard about in the knowledge that exists and the knowledge that gets captured, codified, put to work in ways that amplify value at the system level. And I think that I'm sure this is one of the things that Graft Africa is trying to build to close. So with a lot of excitement, I'm glad to announce tonight that we're also launching our communities of knowledge and practice. It's two interlinked communities. The Innovator Circle is a peer network for practitioners, investors, founders, leaders with demonstrated record of impact in Africa's agri-food systems, people who are building for change, actively navigating constraints themselves, co-designing policy, deploying capital, and iterating solutions as we all learn and collaborate. And an academic working circle, a group that has scholars and researchers across the West African region, North America, and the corridors that connect them, whose work shapes how these systems are understood. And I was really excited to hear Dr. Liesel sort of drill down into that, how they're governed and how they're invested in. Both communities are active and selective. Members will contribute to knowledge production, peer review, and amongst other verticals, form an expert bench that Graft Africa will draw on for advisory work and project mandates. So so essentially beyond that just being like a peer network, we also hope that that's a professional pathway for people who want to get involved in projects that range from like research to like applied work. One of the projects that we're starting out with is an African agri-food case library, real decisions, real actors, real interventions, documented in consultation with African protagonists across business, agronomy, value chains, governance, policy, and at the intersections of health, energy, trade, and infrastructure. We're hoping that one of the outcomes of this is that we're able to gain more insight into some of what is happening on the continent. So, for example, Magdi had talked about a startup that's working on like digitizing of cooperatives so that they're able to provide, I believe it was credit scores for the farmers and help them sort of crowding capital. That made me super excited. I'm currently doing my doctoral dissertation on cooperatives as intermediaries for resilience in West Africa with a case in cocoa in Ghana. So it's exciting to hear some of the work that's happening, but I often find that people don't know, or like you sort of know that there's something happening, but you don't know where to find these actors. You don't know the pockets, and it almost feels sometimes like we're building in silos and there's a lot of fragmentation happening. And so we're hoping that the community of knowledge and practice help us to sort of bridge some of those gaps and make those connections so that like Dr. Liesel spoke about, we can start to build in concert and amplify the impact that we're having. So ultimately for that project, the library is designed for structured and immersive use in education, training, investment due diligence, trade and supply chain research, and policy dialogue, including across Africa Global North corridors. We have other projects underway and are excited to sort of co-create them with the community and not just like Graft Africa being prescriptive about what it is that we want to be working on. Membership is by nomination, self and peer. And I believe we have posters like around the room at the entrance with QR codes to like learn more about them and, let us know if you want to join. We're looking forward to hearing from everyone and just taking the conversation that we've had here forward. The questions that I talked about having more of, we'd like to talk about them. So before I release us, there are people to thank. To the GW IDS program, thank you so much. I'm an alum of the IDS program, so it fills my heart. It's a bit of a full circle moment for me. The Institute of African Studies, the Global Food Institute at GW. I'll just name names because I'm kind of sentimental. So Dr. Christina Fink, Jennifer Cook, Stacy Dean, Dana Darsney, Laura Minlin, who is still in the room, Rebecca Shaw, Debony, who is the IDS program coordinator, was fantastic with helping put this together. A photographer, Catherine, Emmanuel Nyame, who's not in the room, but was really helpful with the creative production of this. And to the professionals that, some of whom were actually guests, but volunteered to help us put this together, Dr. Ibinka, Amoke Odo, Amaka Ijegu, Elfridi, thank you all so much. I deeply appreciate your contributions. Let's talk about the people that made the night happen. Nicholas Bassi, thank you so much. Dr. Moses Kansanga, you guys moderated with precision and generosity, and I appreciate that. Dr. Eleni, Namdi, you gave this room something to carry far beyond it, questions that we'll be thinking about, and hopefully will become catalysts for just much more meaningful conversations and action, more importantly. Thank you. Dr. Lizo Rido, Tope Fanjibesi, who has a special place in my heart. I won't tell you why. Catch me doing mix and I'll let you know. And Magdi, the quality of the evening was yours. Thank you so much. I want to give a special and heartfelt thanks to Dr. Lisa Rido, whose birthday is today and has graciously and generously spent the evening pouring into us. Thank you. We hope that this evening ushers in an incredibly fulfilling year for you. So let's give her another round of applause. Yeah. Okay, so now that I've gotten that out of my system, I will just say one more thing before the room shifts to the more fun part, I hope. Every person here tonight is here because they are in some way in the business of closing a gap. Whether it's between what is and what should be, between capital and impact, between knowledge and the people that need it. That work in my I don't even know. I was hearing people dating themselves by talking about like trips that they took in '93. That was right about when I was born. But in just with my little experience, I find that work is, long, sometimes isolating, and it rarely happens because just one organization or one person solves the problem or finds a solution to it. It happens in rooms like this one, in the introductions that become partnerships, in that question you've always had that you finally find the right person to ask. So in the next, it was supposed to be 50 minutes, but in the next 45 minutes, find the people that you need to find, ask the questions that are burning in your heart, and grab a bite, grab a drink. The room is yours. Thank you, and let's have a wonderful evening.